Welcome back to Wall Street Confidential. A question many viewers are probably wondering, the last rally in oil spot price didn't really move the integrated.
Classic Father's Day conversation, right? Jim, I own Exxon, my dad says. And it's been at $88 when oil went from 100 to 130. And I said, absolutely, Pop. There is just no leverage. You cannot build a model that has a step function when oil goes up like that for Exxon because they're not pumping more. Right. So, they can't grow. What you can do is you can say, okay, listen, if the commodity goes up and they have like a $2 cost basis on their oil, the earnings will go up. But if the commodity goes down, the earnings go down. So, the commodity seems like it's on a spike. No one can take advantage of it. The exact opposite of the natural gas companies. Natural gas has doubled. The companies who are bullish about this are basically saying, you know what we can do? We can go at $12 and go and get rigs. See, they can get rigs. Exxon is having trouble getting rigs. There's not because they drill deep water. Domestic, there's been a surfeit of rigs. You can get rigs. If you had oil in your backyard, you could get it, natural gas. There's a lot of places that were the finding cost was $3. I mean, that's the magic number, okay? $3 to drill and get it out. And then there's another 50 cents VIG to get it to where it has to be. So you're looking at a $3 equation. And when natural gas was at 5.6, it was too risky to wildcat because for every hole that you might get $3 for, you might get a dry hole. At $12, if you, let's say, for every hole you drill, for every 3 holes you drill, you only get 1, you can figure out the arithmetic. It's still worth it. So what we have is natural gas companies that are either drilling or buying, like XTO just bought Hunt, and they're able to be growth stocks. I mean, if a Chesapeake says, okay, listen, we've always had an eye on the Pennsylvania, the Marcellus shale, but it's always cost us $3.50 to go there. So, and we're at $5. Well, forget it. Now Chesapeake says, well, listen, we're at 12. We're a really great driller. We really know how to do our jobs. We can go up there and we can drill 15 wells, and boom, we're going to make 15 cents more per share. And so you have numbers going up at a pace that is much different from Exxon's numbers going up. Exxon's numbers are going up simply because they are sitting on oil. Mm-hmm. Chesapeake's numbers are going up because Nat Gas is going up, and they're finding more Nat Gas. So this is why Nat Gas stocks have kept delivering, even though oil stocks haven't. I've been saying 2008 endlessly is the year of Nat Gas, and there's a simple reason why. We have a lot of it, and we can drill it very inexpensively. So when you have natural gas going up, typically you can divide it by 6. Natural gas usually has a 1 to 6 ratio. So if you divided oil 6 into 130, you would figure out that natural gas really historically would be at 20. So these guys all feel very emboldened. They know that natural gas at 12 could still go higher. Natural gas is clean. None of the politicians seem to favor it, but that's probably a mistake because it's not in states. It has historically not been in states that have a lot of votes, but that's changing too. So I think that natural gas is here to stay, and the way to play the higher oil price is not oil, but natural gas.
Will natural gas ever tell us that there's a top? Ever? Will there ever be a sign? Because we can't look at the integrateds for that signal.
I think that in the case of the natural gas stocks, what you will see is that these guys were historically very honest after Katrina. As Katrina was happening, natural gas doubled over a period of just a few weeks. These guys were all saying it's phony. Mm-hmm. What the guys are saying right now is that this is sustainable. In that oil could drop to 80, and you would still be, natural gas would still be cheaper. So oil could literally drop by a third, and natural gas is still cheaper. And all these guys are just ratio guys.
Wow. Okay. Wow. Yeah. Natural gas immune to the price of.
Well, natural gas gets. You have 2 ways. Natural gas is up in price, so all of their existing fields are worth more. And there's plenty more fields they can drill, which means that numbers go up not just because of their fields, but because of their additions. It's pure growth.
Okay.
I mean, let me just say one thing. It's like a product line. Intel, they have a Pentium, okay? Mm-hmm. And they're just making money off of that. And then suddenly they come up with a new chip and it's big. Well, you can raise numbers just on the Pentium, or you can raise numbers more on the new chip and Pentium, and that's where natural gas is.
All right. Thanks very much, Jim, for that analogy. This is Wall Street Confidential. Stay tuned.